All right, gentlemen, three super interesting topics today. Actually, well, maybe we'll talk about one of them in kind of it's by itself, but then the other two we can perhaps join together. So first, want to hit on Revolut. So they just did like a tender round, okay? $75 billion valuation. These guys are growing fast, man. Up 35% year over year. Active customers at 35 million now. They did $4 billion in revenue in 2024, which was a 72% year-over-year revenue revenue increase, and then 5.9 billion forecasted for 25, and 9.3 billion forecasted for 26. So this is a 12.7x revenue multiple if you apply that 75 billion on the 5.9 billion for the 25 revenue forecast. So the Revolut's a fintech company, right? They do like online bank accounts in Europe primarily, but they are here in the United States. So maybe Evan, I'll start with you, man, because I know you love fintech. Okay, so what do you think about Revolut? Is this something, you like this valuation? Is it too big? What do you think?
We've talked about Revolut before. So,
oh yeah, lots of times.
As I say, I think right now this valuation and this round makes quasi sense because like all fintech valuations, they are cyclical based on the market dynamics outside the macro dynamics primarily. And so look, fintech, like when people are investing, when people feel wealthy, when, there's dollars flowing through the ecosystem, fintechs look great. They see lots of volume. They see lots of, investing. They see lots of consumer sentiment. That's all good for fintech. We had that sentiment for, about 18 months now. Will we have that for the next 18 months? Remains to be seen. When we start seeing a downturn in the macro, I expect to see a downturn in fintech valuations. I do think 12.7x value, it's like totally not outrageous by any means, but these fintech companies, these are really hard businesses to scale, and we're talking pennies on the dollar that you need on every transaction that you earn. So you really have to have a massive amount of scale to generate that kind of revenue. They're clearly doing it. I look at, I think that a very good comp for them from the global perspective is the neobank we see down in Brazil that is crushing it right now. They continue to just make tons of money, grow their customer base, and they're just redefining the way fintech works abroad. And so I think there's a nice playbook for Revolut to follow that. So if you're a buyer in that thesis, I think it's pretty interesting. But here in the United States, where they're trying to penetrate, they're struggling. It's hard. There's a lot of competition here.
Right. So Clint, some of the new news that came out, because Evan's right, we've talked about Revolut in this round specifically a couple of weeks ago, right? But this round, the new news that came out this week is that they were doing some internal workings with this tender offer so that they could stay private for longer. Right. So here's it's a $75 billion company. Now they're signaling that they want to stay private for longer. I mean, what do you think of this trend? It seems like these tenders, these like kind of structured tenders or like periodic tenders are happening more frequently now with these larger companies. And also the CEO teams are kind of like signaling to the market, there's no desire to go public, right? Like as an investor, like, what do you think of that? Is it okay that these companies have no real plans to IPO and they have such a big valuation?
Yeah, I mean, on the valuation point, I don't understand any of the math anymore. I mean, I got pitched a deal, a quantum computing deal trading at 300 times sales last week. So I don't even understand the math anymore.
That's very high.
But no, I mean, because if you do the math on 12 times sales, that means they got to pay me 100% of their profits.
Well, at least they had revenue, right?
Yeah, for 12 years. Exactly. 100% of their profits for 12 years without any kind of R&D or expense. And I understand the market's rewarding growth. They had enormous user growth. You cannot knock the business model. So taking the valuations, out of the equation, the company seems to be performing very, very well. And I think the market's rewarding that, and the liquidity is there for companies that can perform. And so if the liquidity is there for the companies that can perform, why go public?
Right.
Unless you need to do a massive capital raise, or it's just the company's better suited for, the public markets. There's a lot of costs. There's a lot of red tape. There's a lot of bureaucracy. There's a lot of extra expense and regulation that goes into going public. And if you can give, liquidity to your employees, I think I saw on this one, it was like up to 20% employees could sell in the tender offer. Right. I think that's a great deal for employees, giving them some liquidity. And hey, I'm all for it. I'm all for companies staying private as long as possible. Private over public.
Okay, that's interesting. So, Nick, let me ask you this, man. It's like structured tenders are like becoming a real thing, right? I mean, now it looks like Revolut's going to start doing tenders for their employees.
More
Oh,
consistently.
SpaceX does a tender every 6 months, right? OpenAI's done a lot of tenders. Who else? Stripe is doing tenders, right? I mean, like this is like Canva, I think, just did a tender, right? I mean, this is like becoming a thing where like companies are doing tenders every year, every 6 months, or at least on some kind of like periodic basis or natural basis, so people can get liquidity, employee and early investors. Is this healthy? Do you think this like tender
Super
is
healthy,
healthy?
in my
Is
opinion.
it? Do you
Yeah.
think it should be more structured, or like what do you think about all this stuff? Go ahead.
I think when you're able to serve up something so consistently as, let's say, SpaceX is the best example out there, every 6 months the employees can kind of count on it, then they're not out there fishing around in the secondary market on a bespoke or like an a la carte basis for individual lots. They kind of know what they're getting into, and for the company, it's assurance to their shareholders, which are also employees in a lot of cases for these tenders, that they're going to stand by that and keep doing it. And it doesn't
Right.
get you nervous about holding those shares for an extended period of time. So it sets your duration a whole lot longer for being with the company, I think. And the odd part out is, and I'm happy you tossed me this one, was when I was at Market that became IHS Market, a big part of them not going public was that they wanted to be big enough to not be pushed around within the public market as well. So yeah, they could have access to better debt facilities and things like that, but they wouldn't be gobbled up immediately. And the fun fact there is I was there for about 13 years, and I think 11 or 12 of them we had annual tender offers, and it was great.
Okay.
It's not like everybody, ran for the exit. It was, hey,
Yeah.
I needed to put a down payment on a house or something like that. Let's take some off the table. But everyone believed in the company, believed in where it was going. And when the management kind of sees that and identifies with all the staff, I think it's a really symbiotic relationship, and it keeps ticking a nice trend line of where the valuation should be, and you get to feel it out. So I won't wax on too much, but I think having tender offers periodically with some regularity is a really strong signal from a private company.
Yes. I mean, that's the piece I think that's important for both employees and investors. Because if you know that the tender's coming, right, then you can plan for it. And it also, too, I think as an investor, like if you're an employee, that's just great. It's like now it becomes part of your compensation model to like get free option to pull the trigger. You can decide if you like the valuation or not. Do you need the money or not? Like whatever, right? If you're an investor, it's also kind of nice because you get like a proper mark on your position, like an institutional mark on the position, right? You kind of know what it's worth. I can see from like the CEO's perspective and the executive team's perspective, you lose a little bit of control, I suppose, right? There's two ways to look at it. One is you get the transparency because you know now what your company's worth. That's, I think, interesting, right? You can think about what it's worth or maybe have conversations about it, but when people, money starts trading hands, that's what it's worth, right?
That's right.
That's interesting. You also lose a little bit of control too, especially if it's structured. But I mean, like, look, I got to tell you, like, if you're a $50 billion plus company, even $10 billion plus company, I mean, come on, that's like a huge bit. The cutoff from small cap to large cap is $4 billion, right? If these companies were public, they'd be in the S&P 500. Like, these are huge companies. Like, you got to have liquidity. You got to have some kind of liquidity. I think you just have to. I don't know if you have a choice if you're like a CEO of a company this size and you want to stay public or you got an IPO. Right.
My only argument against that is that I do think that the companies do need to have a healthy revenue stream and demonstrate.
Yeah, fair.
Or else you run into the open situation where you have companies that are employees that are joining. They've been there for less than 18 months, and you've made them multimillionaires, and now they have little incentive to stick around. And now you're trying to figure out how to retain them, and you're in a competitive business.
So then is it fair to say when you start your like structured tender program, you need to have like confidence as a CEO or executive team that you're going to be able to like, the revenue train, the revenue growth, like for this foreseeable future, it's going to be good. Because if you're running into
and retaining talent.
Absolutely. The brain drain at some of the the fallout companies, the big AI companies, right, is going to happen just because Mark Zuckerberg wants to step in and offer people $50 million. So I don't know that a tender is going to defeat the purpose there. It's just a factor in the whole idea.
But I could
also
see
knowing that I could take some value and go. It is a little, I don't know. I think it works equally well as it does as a detriment. Because if I was at OpenAI, it was like, when are they ever going to do anything with this weird structure of profit, nonprofit?
Yes.
And then Mark Zuckerberg steps up with a paycheck. I'm just going to walk anyways, potentially. Right. So
yeah, fair.
It's a tough call.
No, but I could see just like you wouldn't want to IPO into like a shit market, right? Or if your company's not doing well, you wouldn't want to IPO. I mean, companies like prepare themselves for the IPO.
Yeah, there's like a dollar cost average component you could do now.
It makes sense that you would start a structured tender when it makes sense for your business, right? So like, I think things are going to be good for the next couple of years. So we'll start the structured tender process. That way, it's not going to be like a net negative, for us. So, okay, that's good. Let's talk about AI apps. All right. So So you guys know that I've been like on the fence on AI apps because I just feel like it's too early, right? And I think everyone kind of feels that way too, based on our prior conversations. But there's
you and Evan have been the most positive on them for sure.
Well, I mean,
I've been the most negative.
I think in the long run they're going to be huge, but I just don't know where like things start and stop. So, but like some of the stuff we're maybe getting, we're getting like some glimpses of clarity, right? I suppose. So there's two companies that hit the radar this week that I think are interesting. One is Sierra, which is an AI agent, and Brett Taylor's the CEO of that company. He's the chairman of OpenAI, and this dude was like, he was everywhere. He's the best, the Silicon Valley, golden child. And then OpenEvidence is a medical large language model solution, and like 40% of US doctors use OpenEvidence. That's a huge amount of market share. Okay. So here's the difference though. So Sierra is one of these companies. So they did a $10 billion valuation. Okay. And they got like, Green Oaks, Iconic, Sequoia benchmark. That's like, the who's who. The who's who. And then OpenEvidence did around at $6 billion, and they have Kleiner Perkins and Google came in. Right. But here's the thing. Sierra is using OpenAI, Anthropic, and Meta. Okay, so it's sitting on top of those companies. Now, you could argue that maybe they have like kind of a consultative approach with their clients, and they have some like incredible clients at Sierra. Some like really great brands are using their AI. It's AI customer service reps, effectively, AI agents. So that's interesting. Okay. And we can but I want to talk about that with you guys. OpenEvidence has their own large language models. So that's like an app, right? I view OpenEvidence as an app. I view Sierra AI as an app, right? But OpenEvidence is building their own models. And I got into that because everyone's spending billions of dollars on models, right? They have like a different approach. It's kind of like a DeepSeek approach. They have like different models for different specific use cases. And they're like training things. So it's like almost like they knew going in, they were going to solve for one thing, right? And then they were able to like box it in and spend a lot less money training that model, right? Because it was so laser focused on doctors, right? And medical diagnosis. So what are your thoughts? Just maybe an update, Clint. Maybe we start with you, man. Like, what do you think just on its face about AI apps? Is it still too early? Is there like this? The reason I brought these two companies up is Sierra's doing kind of what we've seen in the past. They're building on top of the large language models. OpenEvidence is doing it on their own model. Like, what do you think of this? Are you leaning towards one way or the other?
Yeah,
right?
I mean, I'm more of a fan. It's hard on a blanket statement to just say apps on AI are not good or they are good.
Yeah.
I've always thought there's some disruptive use cases for AI, and it looks like OpenEvidence is more of the direction that I would lean, just because there's a moat there. There's an established moat. They have a proprietary LLM or model, whatever, that they're using and training on a specific use case. They're super targeted and focused. And that's kind of the way I see the evolution, because again, all of this is going to come down to data at some point, and that's where the war is going to be fought. When you start to get when you start to have all these open source businesses start to close the gates because they're worried about competitive pressures, because everything's a race to zero. I think that's when you're going to realize who's, swimming with a bathing suit on. And I think these borrow Warren Buffett's term.
Yeah.
But as I believe it's going to be the ones with proprietary models, right? That are super targeted, like legal, accounting. I could see a financial advisory one that's just trained on that data source only. They have their own data. They built the data infrastructure necessary. They built the model on that, and they're running full speed on that one thing.
Okay, so let me ask. Let me ask a more like pointed question. So you could build on a proprietary. Is your thing more about the proprietary data set, or is it more about like the actual model itself? So like you could take an open source model like a MetaLlama, right, and train that on a proprietary data set. You could even do that with like OpenAI, XAI, or Anthropic, but then they kind of like own your data,
and they own it,
so
right?
Yeah. Or is it like, hey, I need to own my own data and own my own model?
I think you have to own your own data and own your own model on that data, because ultimately, at the end of the day, what's going to stop these larger platforms with more capital from just disrupting you in their next release?
Got it. Okay, that's very interesting. Okay, Nick, let me ask you this, man. Do you think
now that does hold on one second?
Go ahead.
That might not apply to Sierra because the CEO is the chairman of OpenAI,
yeah,
so
right.
maybe they have a thing going on.
Yeah. But, I understand.
But in general case,
yeah. Okay, so Nick, let me ask you this thing, because I'm seeing this in a couple of these different AI app companies. So Sierra, my understanding with Sierra is they kind of like parachute into a company and then they build out like a solution, right, with their customer. It's not like it's a SaaS business where you like go to SierraAIagent.com and you like sign up and now you're ready to go and you kind of do some tweaks or whatever and you're ready to go. Like they got to like do work with you to make this thing work. You know what I mean? It's a consultative approach. It's very much like an enterprise sales, type effort. Is that a moat? Do you view that as a moat, right? That like kind of deeper connectivity? Oh, or do you think, go ahead, what do you think?
Yeah, absolutely. If it's something that you're internal to the company and you have their proprietary workflow or data, as Clint sitting on the data piece, I wholeheartedly think that's a key benefit, because if you were not doing that, and let's just use an example of, I had lunch with someone of the big four this week, and they were saying, yeah, the challenges of going public, we just charge so much more for very similar work. And I was like, oh my God, okay. But let's say you parachuted one of these agents into a big four and you wanted to shift him to the next one and the next one and the next one. There are absolutely nuances. Right. Some are better at media, some are better at fintech, some are better at different areas of the market, the consulting, the accounting, auditing, what have you. But your moat just kind of dissipates if you're able to translate the same work across a different firm. So I think, if you can keep everybody's eyes out of looking into what these agents are able to learn, it's like a really tight IP protection on your staff. When you have somebody join your company, they can have 2 weeks and go to the direct competitor, or if you work for a quantitative hedge fund, sometimes it's like a year or whatever it is, right? So think about data in a very similar way as to the IP sitting in someone's head and their workflow, and that's what we're training the AI agent to do. So I think that's super important, because otherwise you'll have the Zoom moment where Google comes out with Google Meets and Teams has the video and everything else, and then just kind of get blown out of the water. So
yes. All right. So I do think I agree with that, man. I think that there's some like really interesting, that relationship matters, right? I think in kind of implementing the technology. Evan, let me ask you this. OpenEvidence is like fascinating to me, right? I have 3 young children, and my wife is hitting up ChatGPT all the time for, like diagnosis on what's going on. Like this
it's funny. I was with a doctor, Aaron. I had breakfast with a doctor last week, and he had heart surgery, and he was actually plugging into ChatGPT, a doctor, a physician, plugging in certain things into ChatGPT to see like where he benchmarked in his recovery. So it's not just it's not just you, right? It's
I believe it, man.
Physicians are using this. Yeah,
I got a buddy here uptown,
If only
right?
we had that during
and
COVID, right? Everybody would know
but
everything.
he says he's a yeah, right. He's a this fellow's a cancer doctor. Says he every single patient he sees, he runs. I mean, he doesn't put like their specific name and everything else, right? But he puts like the case or whatever into ChatGPT. He's like, I view it as like if I walk down the hall and like asked another doctor what they thought about it, right? I mean, it's another data input that I can get, and I don't have to listen to it, right? But it's like another opinion. Maybe it brings up something that I can do more research on or whatever. It was like it was very like it was fascinating, right? But Evan, like, would you? Okay, first of all, they don't have proprietary data at this place. Okay, because I mean, I guess once the doctors are using it and they could see how doctors are using it, that would be proprietary data, right? But they're just using like medical journals and everything else. To me, it's more of the model, right? So they're using publicly available data, and now they have a few partnerships, but the model, they've like dialed that in for medical use, right? So is that a big enough moat? How do you think about that? I mean, having 40% of the doctors using your stuff is a moat, I think. But what do you think about the moat for this company?
I definitely think it's a moat.
Uh-huh.
I half agree with what Clint and Nick said, and then I half disagree.
Okay.
And where I agree is I think we've all talked about this before. The data matters. Having your proprietary data, and I do believe that OpenEvidence has proprietary data. It may not be medical data, but it has operational and process data, which is key importance. Now, whether or not you have your own proprietary LLM from the foundation level versus, say, using an off-the-shelf open source model and configuring it for your own use case, I think that is a perfectly acceptable alternative to being a foundation one, like building your own LLM from scratch business and to provide a defensible moat. And the reality is that, for OpenEvidence, like the parallel that I look at is Epic. Epic is not the best technology company. I think any doctor will tell you, any patient will tell you that their app isn't great. Their infrastructure isn't great. But what it has is it has dialed in the medical operational process. It has all of the fields. It has all the things that you need. It's interoperable within the OS of the hospital or the practice that you're working with. And OpenEvidence can do the same thing. It may not have every single research paper on, skin cancer, but it does understand how a medical operation works, and it can help a doctor do the things that it needs to do, which is paperwork, which is logging, which is making sure records go to the pharmacist, to the front desk, for billing, for insurance, etc.
Yeah.
And at the end of the day, the majority of businesses that operate in our world are not technology savvy businesses, and they're not going to be building their own proprietary LLMs and their own models. They all have their own proprietary data. And what they really need is a configured app that is AI intuitive, that allows them to take AI's ability to, handle mundane processes and operationalize your business much more efficiently. So you don't need personnel and labor and administrative staff. Yeah. And so I think OpenEvidence has a great moat in the fact that doctors already trust it. It's helping them do something they need to do and they don't want to do, which is administrative work, which is note taking, which is sending, all these little ticky-tacky efforts here or there, which take up their time. I think that's a great moat because at the end of the day, the medical industry doesn't strive on the elite technology. If it did, Google and Microsoft would own the medical industry, but they don't. Epic is, and they're the $7 billion behemoth that technology sucks. So I think they do have a moat there.
Well, listen, fellas, I know we got like a hard stop here, but I'll just like parting thought. I do think AI apps are going to be massive, right? I think companies like this, and you're starting to see it show up in the valuations, but this is going to be where like investors get made, like they're going to win or lose, is making decisions around, I think, some of the points we just talked about here. But I will say this, for those that don't believe that AI is going to be a big thing, this OpenEvidence thing got like 100% on like the medical boards. It's like real. So talk about deploying this to every single person on the planet. I'm sorry, but like if you don't have access to a doctor or you can't go, and now all of a sudden you can use this thing, that's better than nothing, right? Or like if you're a mother of children and you want to like hit this thing up because you're neurotic, like you can do it and you don't have to bother anybody, right? Maybe it makes you feel better. So like, this stuff's coming, man. And I think it's going to be every field, like Clint said too. So
yeah, I'll plug my
cool.
Neuralink into
Every
that
Yeah,
next
professional
year.
field.
yeah, man.
Hey, when
So
are we going
I
to do
love-
our fall? When are we going to do our fall meetup? I need to book it.
Nikki's got it on the books, right? Nick, you got
Nope.
a date for us?
I
We're going to
gave
talk
you guys
about the date, maybe.
3 weeks in November. So you guys pick it.
All right, we'll
whatever's best.
sort it.
Yeah, Clint, it's
I
much
like
on
it.
you. Like whatever
Thanks,
you
everybody.
want to do in those weeks. That's great.
Perfect. Love it.
Guys.
I love it.
Clint, congrats.
Fellas,
Guys.
good seeing
That's
you,
huge.
man. All right.